This is The Art of Startup War, and I am your host, Brian McMahon. I am the sensei here at Expert Dojo, the fastest growing startup accelerator in Southern California. Now, in the first 2 seasons, we answered your questions about how to find investment for your business. We brought in the most accomplished investors in startup in America. You can find it on iTunes, SoundCloud, and Google Play. Now, here in season 3, we're flipping the script. We're going to hear real stories from entrepreneurs who are in the trenches today. In these episodes, we're going to take our guests through the storytelling model called the entrepreneur's journey. We'll hear about what sparked their call to entrepreneurship, help they received along the way, forces they overcame, dark times and revelations. So join us every Tuesday, 10 a.m. Pacific Standard Time. Start the week a smarter entrepreneur. Good morning, it's Brian. It is 10 o'clock. It is Tuesday morning. We are back with another brilliant investor and a startup looking to discuss their joint journey. And I say joint journey because not only are we going to hear the hero's journey of the startup, what they built, how they built it, what it's going to become in the future, but you are also going to get to hear direct feedback from a really strong investor here in the local market. Now, today, our local investor is Andrew, who is from a very large family office here in LA. I'm not going to go deeply into the office because anyone who knows family offices knows that they invest, they put money into companies, but they're very private about where it comes from. And it's because it's all about the startup, not about showcasing results. But welcome, Andrew. You're a great supporter of the dojo, LP with ourselves, a great supporter of the startup community here in Santa Monica. And it's great to have you with us.
Great to be here.
And we've got Dan. Now, me and Dan go back a little bit. I've been coming through here for a little while. I've always been really impressed at what you've done. So we're going to talk a little bit today about the company and what you've built and how you've built it and where it's come from. But I kind of know some stuff about this company already. And Andrew, you kind of know some company.
A little bit.
So it's ECFX. Take us through the journey.
Well, first of all, Brian, thank you for having me here. I'm so excited to be in the fridge.
It's a huge luxury to be in a fridge. In case anyone doesn't know, this is the warmest fridge on earth.
Yeah, and if anybody could go back about like 20 seconds, Andrew was saying, you even try and close that door, I'll take off your arms.
Though I don't have a knife, so it would have been hard to do.
Well, thank you for having me in this cozy spot. So ECFX is the Electronic Court Filing Exchange. Our mission is to make it very easy for law firms to do their electronic court filing.
Because currently it's a nightmare, right?
It is. In fact, it can take over an hour to do an electronic filing. When they get the receipts in, it can take over an hour just to download all the attachments and put them in the document management system. It's a lot of work.
And was this a personal problem that you encountered, or you were just chatting in a bar one night and realized something was up?
As much as I would prefer it to have come from a bar, it came from talking to a number of firms. I was out there working. I've been working in the legal industry for 25 years. And I was speaking to a number of firms, and they kept repeating the same issue over and over again. Dan, help me with electronic court filing. This is a nightmare. I've got full-time employees who do nothing but deal with this, and it's not billable time.
Wow, isn't it weird how these admin tasks, which you just imagine are just a part of your day, they become an entire industry on their own because they take so much work?
That's absolutely correct, and that's the case. So by moving from paper filing to electronic filing, they essentially move the burden from the court's own staff to the staff of the law firm.
Oh, that was smart. But don't the law firm like it in some ways because they get to bill more money?
They don't in most cases, so that's a little understood proposition. Sometimes they'll have paralegals do some of the work, and that is billable, but a lot of it is more administrivia that's done by secretaries, and they're usually not billable.
Okay, so then how did you come up with the aha moment to say, this is what I can do, which is substantially easier than what you actually have?
When I was talking to a CIO, and he explained that he had 3 full-time employees who were not billable who was doing this particular task, and he and I both realized this would be relatively easy to automate.
But how did you automate it? What did you specifically do to reduce the time down? And how much time is it reduced by?
So what we do is we actually parse the emails. We go through and we identify where the documents are in those emails. We download and profile those documents according to a naming convention standard and insert those into the DMS. And so we literally take something that can take 20 minutes to over an hour, and we take it so that they don't spend any time at all. It's all automated, and they get an email saying it's done.
Wow. And how many documents are we talking about here?
It depends on the filing. So most filings
Like
have
in
1 to
the
5.
US,
In the U.S.,
yeah,
there's
well,
84 million cases in the U.S. filed each year.
Frick out of here.
That's true.
Really? 84
Yes.
million?
New cases every year
So
filed.
there's literally, for each one of those 84 million cases, you've got some random dude or dudess who are sitting down spending 20 to 40 minutes filling out the paperwork.
That is correct.
Yeah, I love this stuff. You know, it's like DocuSign. You go back and you look at DocuSign and go, what? Like, how'd you become a billion-dollar company? The only thing you do is you just get somebody who used to sign a piece of paper and now they sign it online. And it's because they realized that there's a lot of people signing bits of paper. And you've done the same thing. 84 million is absolutely huge. Okay, so you had the concept, you came up with that, and you go, okay, huge problem, a lot of people doing it, nobody else fixing it, or is anybody else trying to fix it?
They fix it for one court. There are 15,000 courts in the U.S., and so they may fix it for a series of courts like Illinois, or they may address L.A. County, but they don't address the whole nation. And so the problem you have if you're a large firm and you operate in multiple jurisdictions, there's no one vendor who's dealing across all the jurisdictions.
I like Dan. Like, full disclosure, we tried to get him into our accelerator. I got turned down. I was like, I was the guy who wanted to go to the prom, and I was standing outside the door because Dan had another girl. Yeah, it hurt. You hurt me.
Brian, I would never want to hurt you. You're a fellow Irishman.
So Dan, you don't have the Irish accent.
You know what though? I like it when he plays hard to get though. It's good. I still got my eyes on him for the future. No, I saw this at the start. I saw, hey, look, that amount of documents, fixing it, and I really like the moat that you've created is the fact that there's so many different courts and there's so many different documents to come through. Andrew, you liked it as well, right?
Yeah, I liked it a lot. Dan knows this, and his co-founder Nelson know this as well. And I was actually looking in my notes from my previous meeting with Dan before I got here, and I just showed the guys it, and it's a page that says ECFX, and I have 0 questions, and that was my notes in our meeting. What follow-up questions did I have? And he had addressed every single one the first time we met, and that was really impressive. And I love this boring stuff. I like boring things. Boring things is where you make money, in my opinion.
Me too.
And there's less competition.
Me too. So talk about, we're going to come back to Andrew because I want to get his views on scaling. But how do you, firstly, actually, let's go a little bit further back. How hard was it to build what you're building right now? Because you did it bootstrapped and you did it yourself.
Right. So it is an ongoing effort. Let's be clear about that. There's a lot of, we have our pilot accounts, we're getting there, but there's still some ongoing effort. We have a lot of lead bullets, as was said by Mr. Horowitz. So basically, with each court, I built a prototype. I shopped that around to some law firms. Some law firms said, yeah, we love it. In fact, every law firm I've spoken to loves this idea. Right. So a couple have said, yeah, we're coming on as pilots. Some very large firms who I cannot disclose their names because of terms of our agreement. But we're working with them to get them fully live and operational across the country. And currently, we're getting the Illinois courts all sorted out and working. And the nice thing is Illinois has gone to a more centralized platform, so that's simplified things for us.
And it's also, so this is a software as a service platform, a SaaS platform, which actually ties into what Andrew's saying about this being extremely boring. Like, boring is great. And you know, there's one thing that's better than boring. It's boring that repeats every single month. So I like that. You see, it's so boring that Andrew just fell asleep and he woke up with a sneeze.
I was trying to get you to stop talking so we could have a cough break, but...
Come on, the sneeze is part of it. The sneeze is the moment that makes you realize that it's real and it's a proper product.
You'll be scared when you hear an actual sneeze.
Yes, one of the investors I'm speaking to said, I love it, it's boring, and it prints money.
And it doesn't stop.
It doesn't stop. It's super simple.
What about other people trying to come in and take over the market, though? I understand about all of the different courts and all of the different filings, but can somebody else just come in with a similar type model?
Well, the nice thing about the legal market is it's relatively sticky. Once you get a law firm on your product, they tend to stay there for 10 or 20 years, right? So it's very common to have 97% retention rates in this industry. And so the key is, of course, to be out there with a successful product that actually works. And once it works, it's all word of mouth from there. They sell each other, right? They all talk to each other. It's a relatively small community. I'm really targeting the 500 largest firms in the U.S. right now. Obviously, there's bigger plans beyond that. And once you're in, it would be hard to displace for a like solution. It would have to somehow be significantly differentiated to replace it.
Okay, brilliant. And then talk to me about where it's going to go in the future.
So think of this as a platform for electronic filing. And litigation is one area where we do electronic filing. In fact, U.S. litigation is one area. One of the firms we're talking to is already asking us, what about Canada? What about the UK? What about Australia? We're all over the world. So an obvious place is litigation in other countries. The second area is transactional work. There's a ton of transactional filings. In fact, I was talking to a lawyer the other day who's very excited about us getting into the patent space. And both of you know, but the audience doesn't know that my co-founder Nelson is a patent attorney. And so we will be eventually moving into that patent filing space as well.
And it's just so you'll become, rather than the firm that does one particular form, you will be known as the platform that simplifies, makes a confusing world simple.
That's well said. In fact, the way we look at it is we're demand side, so that we go to the client and we deal with what they're demanding, right? So we look at it from the client's perspective. So when this firm says, oh, our next department that has this issue is Department X, we address Department X.
Yeah, and what I like is, like, when I'm looking at these things, I'm looking at normally three areas. I'm looking at the ability to build a really beautiful customer experience, strong execution, and scaling. And this does tick all of the boxes. But and I want to bring Andrew in immediately after this, but speak a little bit about the money that you believe that you're going to raise to build what you're going to build and what your milestones are going to look like on that path. And then Andrew's going to hit you with some questions and some advice and some help to actually help you get there.
Well, thank you for that. So right now we're raising $1 million and we have 350 secured, I should say committed, 150 in the bank, some coming into the bank. And that's on $1 million. And that should get us through towards the end of next year, at which time I think we'd be ready for a Series A. And we would have, at that point, a number of firms live, good reference accounts, and we would be dealing with both what I call the receipt side, processing the receipts, and we will have started the initial filing side of the equation, which is a very large part of the problem.
And by the way, you're an attorney as well, not just Nelson's been.
Correct. I'm an attorney and a programmer, but I made the decision many years ago that I preferred writing code over arguing with people every day.
Not a bad choice, I don't think. Considering where you are now, and I think you have something that's gonna blow up.
So what's going to be important for him, Andrew, as he grows the company? I know as you're investing into startups, you invest in not ridiculously early, but you'll invest in it as the companies go further.
Exactly. I mean, we don't invest pre-revenue generally. There's a tiny number of exceptions, but your pre-revenue. I think that's going to be, you're going to have some revenue coming in later this year, I think, right?
Correct. Towards the end of the year, we'll have revenue coming in because we have the letters of commitment from the firms.
Okay.
So let's fast forward to that time, and Dan's coming into you and he's sitting in front of you and the family, and you're looking and assessing on the deal itself. What kind of things are you going to be looking for, either for an investment for you or for other people you might know?
I think for Dan, generally we would care a lot about sales strategy. Great products are great, but you have to be able to sell them too. And great products, believe it or not, don't sell themselves in every industry. Some consumer they may, but in the industries we primarily invest in, they don't. And I think that actually, from what we've talked about, I think you have a pretty defined sales strategy. I mean, you already have these big boys committed, right?
Sure. So we have a clear go-to-market plan. I happen to have the benefit of having been in the industry, and I have a lot of connections to.
What was your experience in the industry?
I worked at Thomson Reuters for 20 years, and there I built. Before that, I was at a company called Elite, which was acquired by Thomson Reuters. So I've built 5 legal technology products from the ground up. All right. I built the number one conflict of interest system. I built case management systems. I built what was called an ASP before they were called SaaS back in 2000, which we eventually divested because it was hard to build a business on the cloud those days. But today that's proven to be a great market. And so I've dealt with a lot of large firms. I've spoken to firms all over the world. I've spent a lot of time in the UK and Australia. And during my travels and in meeting with people, I'm well connected into the largest firms in the world. Obviously, that's where we're starting because it's much easier to take a product down market than it is to take a product up market.
Yeah, no, I think that's one of the really compelling things about what you're doing is you've told me some of the size of the firms that you have, and it's very impressive when a company comes to us and says, oh yeah, we already have 10 of the largest 100. That's not where you are yet, I don't think, but that's very impressive. I see companies all the time that say, we want to target the Fortune 500, so we're going to start with the Inc. 5000. That doesn't work that way.
Yeah, and I also like how Dan saw you before he was ready. right? He came to you. He came to you at a time where he's miles pre-revenue, and he said, "Andrew, not looking for your money right now, but in about a year's time."
wanted the money.
Yeah, but also it's about predating, right? So he also knows what the criteria is as soon as you tell him, and he doesn't stop interacting with you, right? He sets out milestones of what he's going to achieve, and the nice thing about a boring business, and I really mean this to everybody listening, find a boring business. If you can find a very simple, boring problem that's broken, that is non-sexy, you're not going to have anywhere near the amount of people doing it as well.
Except you also need to have some moat. To prevent the other people from getting in. I think that's where I want to go next with Dan. And so I don't think you've shared this on the podcast yet, but you and Nelson are working on different parts of the problem right now, right?
Correct.
So what is Nelson working on at this moment?
So Nelson's working on the court interfaces. So he's been working most recently with the Illinois court system, understanding what their Odyssey system does and how we can interface more efficiently with them. So one of the things that will differentiate us is we're going to have deep relationships with the court. In fact, some of the trade shows we'll be going to this year are court trade shows, court technology trade shows.
Not for sales.
Right, not for sales, but actually to build a relationship with the courts, because ultimately that's where you have to have the partnership is on both sides. Because if you have the partnership with the courts, they may give you a heads up before they make that change, which is going to break your interface, right? These are the kinds of things that are critical to the long-term success of the business.
And so your competitors break, you don't.
Exactly.
Everyone switches to you the next day, even if they have to
works.
pay out their other contracts, and that's what's really, really cool. And I think that's what really differentiates you is when you have two founders who they may appear to have the same set of skills, but really they have different levels of skill, and then you divide and conquer.
How do you feel about co-founders versus solo founders, Andrew, in general?
You know, it's funny. Looking at our companies that we have in our portfolio. A lot of them are co-founders, and then the ones that have had issues in the past have sometimes been the sole founder ones. But oftentimes there's a founder that's stronger, or there's a founder that does all the outreach, right? So I think all but one of my emails with Dan has been, with ECFX has been with Dan. Another company that you've had on the podcast before, Sonic Pass.
Yeah. Brilliant Carey, yeah.
Haven't met his co-founder, but he's clearly the one running that business, but he does have a co-founder, and you want to have that generally. I think, especially also before I was doing the investing side, I also ran a company, and I had a co-founder, and I had made way worse choices than him. I fully admit that, and I think you bounce ideas off each other, right?
Oh, absolutely. It's a great relationship. We've known each other for 35 years. We've known each other since high school. But
good sign, Bapel. Very good sign.
As I've said, it doesn't mean we're a couple. We're in other relationships. So we don't have a romantic relationship. I think it's also important for a business. It has to be professional.
100%.
A romantic relationship, it's nice to look at and to think about, and it's romantic, but it sucks in real life. It's really hard.
And I think you'll have a lot of trouble raising if you have a romantic relationship with your co-founder. And I've actually seen this in some later stage companies we've been pitched.
Yeah, so it's very challenging. Just beware and be careful. And I would say if any of you are in romantic relationships, you've made it work, God bless you. You will have challenges, like Andrew said, within the venture side of it. But just on your own level, make sure everything is skill gapped and written out and very, very clear as to who does what. Because otherwise,
you're going to have a lot of fun.
Yeah.
And the fun is going to be very negative.
Yeah.
Yeah, for example, I have delegated 100% of the, if you will, the aesthetic elements to Nelson. He's got a great aesthetic sense, and he's the one who came up with the logo and the other elements, which I think are working for us. Where I'm much more about the product, feature, function. I'm definitely down in the gears, in the wheels.
You know what I love about what you just did there? You did not move to roles. You moved to skill gapping. So rather than just saying, well, he does the technology and I do the hiring of people, you said, no, what he is good at, because that's as a startup grows, and what I'm terrified, especially when we take the startups in at the beginning, and Andrew and I are always talking about companies that we bring in and why we bring them in, and it's because it's so early, but the one area I'm always looking for is, what is the skill gapping strategy at the beginning? What are the skills that are required right at the beginning? And then how do those skills change going forward? And what's, to your point, Andrew, the strategy plan to actually fill those skill gaps?
Yeah, I think it's huge because you have early stage founders that are great, and then they can't grow. I mean, I've asked companies before, at what point do you plan, the founder, at what point do you plan to no longer be CEO? because sometimes you see that early. Right now with Dan, not a question to me. Because I think he actually has the skills that are needed to make this grow. And I think along with Nelson, they have a team that can, they can actually, I would not be scared to have 2 founders on a board.
Great point. And by the way,
Wouldn't.
so notes, again, in your notebook, write down there, if you're the CEO, it's okay if I'm not the CEO going forward.
Oh my God, you
If
have no
the
idea how
skill-
easy your life will be if you're not the CEO going forward.
You know what? We're almost better off changing our title to Chief Creative Officer. Because at the beginning, at the start, even
For
though
some
we need to
CEOs.
do- No, but in our minds. I'm saying in our minds that we've already accepted at the beginning. And you're right, but the amount of CEOs who are still brilliant CEOs for public companies after taking it all the way through, there's very few, right? It's the minority by a million miles.
Yeah, I mean, not everyone's going to be Mark Zuckerberg. You're not going to be...
But even Mark Zuckerberg was way out of his depth. He was babysitted for how long?
Yeah. And, I mean...
Is that a word?
Sergey and Larry...
Sat, maybe? Thank you.
Didn't Sergey and Larry bring...
They did. They brought that brilliant coach from Silicon Valley. Was it
My
Alfred?
mind's blank and I met the guy.
Yeah.
But, Eric Schmidt to basically take the company public.
Eric Schmidt, and then Eric Schmidt had a coach as well who came through, right? So it's a really challenging and difficult journey to go from scrappy, tough, I'm a beast startup to I'm a HR genius sitting in the middle of a boardroom with attorneys around me.
Yeah, if you think being a CEO is sexy, you need to reevaluate a lot of the decisions you're making because it's not. It's the 20-hour-a-day job that is hell-raising in your own mind.
Yeah, and some of us are okay with it, but just the skill gapping point was the one I wanted to make. Make sure your skills are appropriate for what needs to be covered at the time. But anyway, it's well done you. You've got the skill gaps actually covered really well.
I look forward to someday having to hire that coach to help with the IPO.
Boom. What are the challenges that you see, Dan? Okay, let's get super negative, starting with you, right? What can go wrong?
So what could go wrong? Well, of course, courts can change their interfaces, right? So that's an obvious thing that we need to be monitoring and constantly aware of. Sites can go down. We are deploying everything with the latest technology. We're using Kubernetes and Docker files, and we're doing infrastructure as a service. So we're trying to build the right infrastructure, but it's new technology, right? So if Amazon goes down, that will impact us. And the problem that you have as a startup in legal is you have to make your name in that first year or two, or you won't have a name, right? It's one of those things where if those first clients love you, you'll be fine. Everything will be good. I haven't seen a startup that started out with happy clients ever fail in legal. It's where you can't get that initial happy client.
So do you have happy clients?
So far, they're happy.
But they're not paying you yet.
Exactly. It's the combination of both. And that's when we'll know for sure that the business has traction. The problem that this business faces, in some sense, is that it doesn't have that standard gap phase. We're kind of going to go from 0 revenue to well over $1 million of revenue because of the nature of the clients that we've signed up once they're live and operational.
Big risk.
Right.
You have to deliver on every promise, and this is something some startups fail at, right? They sign up these great big clients, and then they can't service them, and it's not necessarily because the product's bad. It's because they don't have the support team, or they can't hire fast enough because they don't have the cash to hire, and they're hiring their employees are asking for, hey, what's your runway right now? Because that's a question you're going to have, and that's actually where I wanted to go next. I mean, how are you going to hire? It's always harder to hire in a boring field.
So far, the technology people have found this interesting on a number of fronts. So our chief architect, who is the Force security hire at Coinbase, Charlie Wolf, very smart guy, was like, this is actually an interesting problem because it's a many-to-many interfaces problem. You've got a lot of interesting technical challenges here. And we've now been most recently interviewing for a front-end developer. And they're like, wow, that's an interesting problem. And they're used to seeing, I want a website for a consumer product, or I want another dating app. And to them, those problems are not as technically interesting.
But yours is a lot of it's about the interaction design.
Correct.
Get to make it move faster.
And it's a lot of back-end deep stuff. Exactly. It's like parsing emails, right? Well, parsing code is actually interesting code if you're a coder. It's not a dating app.
Yeah. I think.
Do you feel that question's covered? So as far as actually finding the team?
So I haven't really looked much into Charlie or any of the. I don't think that's the only hire you've made right now, but that's something I don't think you can tell right away. I think you need to wait, maybe 6 months, see how everyone gets along, see what problems occur, and see everyone in the same room. I think that's really important, is to actually go to the company's office and see how people are interacting. If people aren't talking at all, you may have some concerns. If it seems like people are just checked out, it's not a great move. But there needs to be some happy medium. If everyone's just socializing, is anything getting done? You shouldn't just hire your friends. You need to hire people that can actually accomplish the goals, in addition to working well with everyone.
You're right. This is not the right forum, probably, but I could go into a rant on some of the issues with the open plans that have been out. The offices are more productive in many ways. I've always been a fan of programmers' offices because I've been a programmer myself, and I know you need the ability to focus sometimes, but you also need a social environment. You need a balance between the two, and creating that balance is key.
This is a very interesting conversation for another podcast, I assume.
Yeah, it is, but it's very important because these skill gaps, like as you grow, it's really funny that we're talking about one of the biggest challenges the company's facing is bringing in a shit ton of revenue. Is the actual size that you become because of your success that it's coming from.
How do you guarantee collection? Do you just outsource it to someone else, give up 10% of your revenue, and just say, oh great, they're going to buy all my collections because these are high quality customers?
So the solution to that actually is we're going with a model that I am adapting from another vendor in the space where we have only ACH and credit card and we charge them automatically. There's going to be no receivables.
So literally every
firm,
every $2 is charged automatically
at the end of the month.
At the end of the month, okay.
Yeah.
Okay. I was going to say, if you're charging every $2 right away,
and then we
that's
give
a
them
horrible business model.
We give them a cost load file that goes into their time and billing system, and they are able to recover that immediately from their clients. Well, when they get paid by their clients, they get that back.
Good. So you're building good structure in. What else, Andrew? We're looking at the team. We're looking at the growth. We're looking at the skill gapping. We're looking at the central skills that are required. What else?
What are you going to do about competition? Because I actually think, you worked at Thomson Reuters.
Yep.
There's a lot of big players in the legal space that have a lot of money.
That's true. Thomson Reuters buys company like ECFX. In fact, I purchased 5 companies while I was helped purchase, I should say, 5 companies while I was at Thomson Reuters. So I know what it looks like. I also know that Thomson Reuters doesn't build products in entirely new spaces that they're not in, right? So they're not likely to get into a new space because there's a bit much risk for it. They would prefer to extend their Westlaw product lines and their other product lines that they're familiar with. It's an easier use of capital. The ROI is right there for them. They don't take this kind of risk.
But isn't this just an extension of their document management system?
It is not, actually. It's a new e-filing interface, and they did look at the e-filing space for courts, and they ultimately did not get into that space. Lexis did for a while and got out of that space. The big player there is Tyler Systems, but their clients are the courts.
And that's, you don't care about that. And they're not gonna go to the other clients because then they might have conflict.
Right. In fact, the last thing any state or municipality wants is to think that, what you're doing here is you're creating a monopoly, and you're going to lock all the law firms into a monopoly pricing model. So you have to have an open market.
Aren't you a little afraid, though, that...
I love monopolies. Come on! Why does everybody have to be a spoiler?
Monopolies can be good when they're not technically monopolies.
At least for a while. Ask Google if they're okay with it.
Yeah.
But you bring up a good point. And my mind just went blank. But no, yeah. It's in the monopoly space, right?
Yes.
And that close connection and potential conflict. What happens though? Because you're going to be working really closely with those courts.
Yes.
Aren't they going to feel, maybe you are the monopoly on the e-filing system? If you're the only one that can integrate really closely with them.
Well, no, they all have multiple vendors. So, for example, there are 50 vendors who can help you e-file in Los Angeles County today.
Yeah, but I think
but
LA is an outlier, right?
Well, no, a lot of courts have multiple vendors.
But not 50.
50 is an outlier. New York's got a lot as well because they're all going to the supply side, if you will, of the equation. And they were usually attorney services before that. So any firm, like the firms I'm dealing with now, say, I've got 20 vendors I'm dealing with. They can always go back to their 20 vendors. What I'm creating is a one-stop solution. So if you want that simplicity, yeah, we may be the only solution for that simplicity one-stop shop, but you do have other solutions. If I start to charge, I have a limit to how much I can charge because you'll pay the other vendors if I charge too much.
It's true. It's like DocuSign are kind of a monopoly, right? Like there's loads, but there's lots of others who do it. But we all use DocuSign.
Actually, we don't, unless someone sends it to us. If I'm sending something out, I use others, whatever's.
So Google aren't a monopoly, but they kind of are, right? It's just that all I'm saying is if you become really good in your space and you're providing the best user experience,
50%
with
of the
best
market
pricing,
or larger is almost a monopoly, right? I think I forget the exact definition. Long time ago, Econ won, but
Right. Yeah. No. I mean, I think there are a couple different definitions here, but the point that you're trying to make is if we become market dominant,
yeah.
what's gonna
What's
happen?
that risk?
It's interesting because legal has a lot of market dominant products. It's very common for the market leader to have 70% of the market share, and for there to be a second player that has about 30%. And
I'm happy with either outcome.
right, they're both good outcomes, and those
They're
businesses
both
do
great
well
outcomes.
because it ends up being a natural duopoly. The funny thing about the legal market is law firms almost always limit it to 2 vendors right away out the door.
So literally, before they even look at the options, like, okay, let's compare these two.
Correct. And it is strange, and it's different than corporate. And it's, I believe, and this is my rooted belief having practiced law, is because lawyers are used to there being 2 sides to every story. And they make the vendors come in and they'll often do a bake-off. But very quickly in any process, they may have 3 or 5 initially. They almost always do the selection based on 2. And that leads to a natural duopoly. So you have Westlaw and you have Lexis.
So all you need to do is get into that final 2.
Correct.
And even if one of them's winning half the coin tosses, and there's 2 coin tosses, even if one's winning 75% of the time, 25% of the time is still an amazing business. And that's what we're going to get into next is your market size, right?
Yes.
So in terms of your market size, this is something that I don't think we've talked. You said 84 million filings.
Correct.
But not all 84 million of those filings are actually in your target customer, right?
Correct. So we are targeting the multi-jurisdiction firms, the ones that have an office in more than one location. It represents, depending on how you look at it, 50 to 40% of all the lawyers are in firms that practice in more than one jurisdiction. Only about 10 to 20% are in those 500 firms that I'm targeting today.
Those filings.
So the interesting thing is they're almost always on the defense side. So, for example, one of our clients, and I won't name names here, is dealing with the opioid crisis. And they're doing a lot of defense. So you imagine on one side you've got these small plaintiffs firms who only practice in Buckhouse County or some small county. And on the other side you've got a very large firm that's national that's doing the defense. And so those are our clients.
That's really interesting. So that's where the smaller competitors that you compete against that are single jurisdiction have no play in that space.
Correct. But they're going after the plaintiffs firm.
Right. And you're going after the defense where they might be in 500 counties.
So how many are we talking about here? Like, what is the market size? I mean, how many firms? How many firms are going to use you, and how much can they pay, and how much money can you make? Because what Andrew's looking at here is this a company that's going to bring in a couple of $100 million a year, or is it not?
I don't require a couple $100 million a year. I'm fine with businesses that are just $50 million a year max. They're still great businesses, especially in the family office play, where it's a wealth preservation rather than a wealth generation game. But
it's early days. If I've sized this correctly, it could be a total addressable market, SAM, of $600 million. It could be our market, if we get market dominance, could be $400 million in annual revenue. We're not there today.
And that's just with the top 500 firms.
No, that's really the top 2,000. Then
let's go top 500, which are the easier sales.
That's probably more like 150 to 200 million.
Oh, what a horrible business!
It's all right though. You can live okay on that. Okay, so I want to finish off the podcast with 2 parts. First part is you. And this is where you get to talk about your vision of the future. You get to look back and see how you've actually moved forward to wherever you came to, whether you came to an acquisition, whether you kept the business yourself, whether you IPO'd, and just talk about that story getting there. And then I would like to finish it with Andrew giving advice from his perspective as a really well-respected investor in the market here about what will actually help you achieve that.
Well, thank you very much. So when I think about the journey to date and coming from a background where I have built other products, but for other vendors, right? This is the first time I'm building a product for myself. I want to take it to the level where I think I've maxed out my growth potential, right? So, for example, if in the early days we'll be growing at, double-digit, even triple-digit growth, at some point, if we go to low double digit or even especially single digit growth, it might be time for me to say, okay, this is a logical time for me to find someone to help boost the company. That's probably, I'm saying 7 years down the line. There are a couple different options in our market. There are a number of funds that are buying these companies. In fact, that's probably the most likely exit scenario. There's a fund out there that's bought companies like Latera and Microsystems and is very interested in the legal space. And the nice thing is that they can buy a company, put it through their sales channel, and they can get a lot of growth out of it quickly because they already have the sales channel in place. So that might give an opportunity for exit. Ultimately, for a company like this to IPO is probably unlikely because it's fairly specialized. There's not a great market story. It is a potential outcome once you hit a certain revenue level, but more likely an acquisition.
Or you can end up in Canada.
That's true, the Canadian market.
But I like that because it's a very clear journey to get to where it needs to go to.
That's one of the most concise statements on your goals and what your objectives are that I've actually ever heard from any founder.
And what advice would you give him, Andrew?
Well, first of all, if that's going to be your idea and you want to continue the double-digit growth, and you need to really actually generate KPIs and try to hit your milestones. Because if you don't have milestones and goals, you're going to have a lot of trouble actually meeting them and knowing when you're doing well and when you're doing poorly. But also, remember, not every company has to continually have double-digit growth. I think this is something that people miss. A company growing at 10% every year is still going to beat the market.
Yeah.
And beating the market is the goal of this side of investing.
Yeah, and you brought up a huge point, which is that a $30 million sale is a great sale for everybody if it's done relatively early.
I'm not investing at a company that's a $30 million cap, right?
Right.
If I'm going to invest in you in a bridge to A or an A round, then I'm honestly not sure you need to go further than that. I mean, we didn't really get into what products launch when and, what are the additional products you could launch. But the initial product space, I'm not sure you ever need to raise past, once you hit once you hit break even. And I think you're going to hit break even at a bridge to A, right after a bridge to A, maybe an A. And, I think you need to pick what you care about, right? Do you care about trying to become that $200 million company or $200 million revenue company, or do you just care about making a, $100 million valuation company?
You bring up such an important point, because if we look at Lyft and we look at the founder of Lyft, and they have less than 1% in their company, right?
So what?
One of the founders, right? So, yeah, but we're talking about one of the most successful companies in the United States, right? But think about, if they have a $40 billion or $35 billion cap, whatever it's at right now, it means really...
Oh, my God, the horrors of $350 million.
But $350 million after tax is only $100 million.
The horrors.
I'm just saying that's the most successful company, that top 10 successful companies in the last 3 or 4 years. But how many companies can come through? Your point is that if you can get through with very little dilution, if you can build a company in a short period of time...
You guys should see my face right now.
No, because you just mentioned that if he doesn't need anything beyond a Series A, there's very little dilution for him. Right?
Not necessarily, right? He may be at a lower cap to start, right? You may raise him, I don't know what you're raising the million at it, but maybe $3 million.
Yeah, but that's just one round. So it's just one round he's got to go through. He gets through that round. Let's say he doesn't need anything after that. He builds the company up 3, 4, 5 years. He builds it up to $50, $60, $70 million. I would take that result any day other than 12 years in a boardroom in Lyft, going through the hell that they had to have gone through to get to an IPO.
100%. And I think everyone thinks, I want to have the private jet lifestyle and all that stuff. But when you really look back at it, is that your goal?
No, it is not my goal.
And you can get a very nice little jet for $30-50 million. Thanks very much.
Personally, I don't think anyone needs a jet.
At least an RV.
An RV for sure.
I want my adventure van, and I think you can. An RV is a great idea, but you're generally very happy with an exit where you'll net $5 million, right?
100%.
That's maybe not in LA.
No, he doesn't need it for. He's not looking for this round right now. But your point is still strong, which is an exit is an exit. You build up a company, you get it strong. If you can make it cash flow positive, you make sure that you're profitable. Then you are the one who has control. That's the glory of this. You don't continually have to have an up round to keep investors happy all the time. You're the one in control. You're the one who decides.
I actually would counter that. You generally do need to have an up round to have investors happy, because at some point you may need you may need an investor to give you a quick hard money loan or something. to save your business. And if you've had a bunch of down roads, you pissed off your investors, you might not have anyone to go to at that point. You might not have someone in your corner who's fighting for you. So you really do need to keep your investors happy. I am a big believer of that.
So let me put this out there, and this is a question for Andrew and Brian. So another model that these businesses take in legal, because of the 97% retention rate, of course, is to build up the revenue stream and then to milk the revenue, because you can get 70% margins on these kinds of businesses.
Oh, yeah, for sure.
Right? And so then you could pay the investors back maybe through dividends or other means. That's less attractive?
For a family office, it's fine with us, right?
But for everybody else, no.
I mean, it depends if you're funding only through family offices and you're funding with angels. I think angels would be fine with it, right? Oh, great, I put $25,000 into a company and they're now giving me $10,000 a year. What a horrible investment. No, it's different people are going into it with different goals.
Right.
Personally, it's not the end of the world to me. I don't think we as an office would really care much about that if that was the outcome. I think that's a positive outcome. But the goal in this space is to get it acquired and have that liquidation event, which is nice.
Exactly. So just so you both understand, and those listening who might be interested in investing understand, my vision would be actually to grow it and let somebody else take that cash out of it later, so like a hedge fund or something, and they pay for that cash up front with an NPV price.
Yeah, it's nice.
Beautiful. It works well. And so the question you asked, there's no exact answer to it. Like most people who are investing in the early stage space, family offices have got a very long-term view on things, which is actually the most sensible view on things. They want to make sure that they outperform the market, outperform everything else.
And we don't have terms that we have to hit.
Yeah, right.
That's the big difference.
And you're going to be around for a long time. Venture capital firms are very different. A VC firm is looking for a 20, 30, 40, 50, 80 times return, even though they probably won't get it. Their objective at the beginning is investing in a company that gets there. To the point that I was talking about before with control, one of the reasons why founders really struggle is because they have to do things that they don't want to do because they've lost control. Now, when I talk about Lyft, or Uber, or WeWork, or any of these companies that lose billions of dollars every single year, an up round is merely being able to get more revenue, which is useless in an actual company itself. You have the ability to control your growth as it goes through. And it means that you should take care of your investors, but it also means you can make the right decisions for the right reasons to build a strong company. So that's kind of my excitement. Keep your eye on the
prize. That's the whole thing. And the prize is not raising more money.
Yeah, and then drive that sucker all the way that it can go to, and then you look at the options at every single junction. To Andrew's point on milestoning, every single juncture, what's the best thing that I can do for my shareholders? And it includes me today. Mate, it's been a pleasure having you on here. Thank you. Look, anybody who wants to connect with Andrew, it's a family office. Please feel free to reach out to me, and I'll ask Andrew anything that you would like me to ask him. It's Brian at Expert Dojo, as always. How can people contact you?
So everyone can reach out to me if you're interested in talking. You can reach me at dan.oday, O-D-A-Y, at goecfx.com.
Of course they're going to be interested in talking. You're going to be like $100 million plus company, for God's sake.
This is the kind of space you play in. I'd be going really, really hard at Dan. I think it's a great company.
I'm backing him.
Thank you.
Looking forward
so much
to
for the
his bridge
opportunity.
day.
Man, I'm just hoping he'll give me a chance for a second date sometime soon. That's all I'm looking for.
You've got a second date for sure.
Thanks, Dan. Thanks, Andrew. Pleasure and always wonderful having you, especially, Andrew, because we're going to be doing another podcast very soon.
I'm stuck in this fridge for a little
You're
longer.
You're not leaving. That's a wrap. Thanks for joining us. If you love the podcast, please empower your circle by sharing these stories. The Art of Startup War is brought to you by Expert Dojo. And remember, we invest in startups, $50,000 checks. Make sure you apply on our site if you are one of those great entrepreneurs looking to bring your company to the next level. As far as the Art of Startup War is concerned, we are back every single Tuesday at 10 a.m. So remember, check out the new episodes. If you want to find out what the investors think, check out season 1 or 2. But make sure you join us every single week.